So first I'd like to welcome you all to this discussion of innovative financial solutions for today's development problems and challenges. It's really a pleasure. I'm Alan Gelb from the Center for Global Development. It's a great pleasure and a privilege for me to be able to moderate this wonderful panel on this topic. What I want to do is briefly just make a couple of comments on the topic and then introduce the panel members, and then it's over to them. I think that most of us would agree that over the last 15 years, the period of the Millennium Development Goals, there have been a generally favorable environment for development and a lot of successes. We did have the global crisis in 2008. This was followed by a recession, but there was a bounce back. And commodity prices boomed again after that. Private capital has flowed, looking for yield. Despite odd setbacks, most development trends have been fairly favorable. Well, we've had areas of concern, even during this period. We've had lagging countries, often fragile states, and issues relating to security. We've had questions about global public goods, climate change, but also global health issues. And some of these particular challenges have been intensifying. This morning, I was just at a panel on antimicrobial resistance, the problem that many antibiotics are losing their potency, and there is a problem of how the world will step in to encourage new ones. The fragility of the recovery. I think we've had a sense always that the recovery has been rather fragile, and the question of job creation. And of course, demographic imbalances with aging populations in rich countries, growing populations and labor forces in poorer countries, and how to manage migration flows. So where are we now? We have, I think, some external headwinds relative to the previous 15 years. Global growth, pretty anemic, running at around 3%. We've had huge commodity price declines, which is, of course, a tremendous issue for many developing countries that are very dependent. I mean, oil from its peak has lost 2/3 of its value. So, this is just enormous macroeconomic changes. We have pressures on many aid budgets, and we have tendency for capital flows to reverse. And we have, of course, pressure on commodity exporters. Many countries have more or less exhausted their policy buffers, so they can't be as active as they could be before. And we might be near the limit of what expansive monetary policy can do to stimulate demand. So these are all issues. And of course, we have some of the global concerns which are still with us and have not gone away. We now have 60 million refugees. This is the highest number, refugees and internally displaced people, the highest number since the Second World War, for example. There's still massive challenges. So to address these issues, what I'd like to do is to introduce our panel. Oh dear, it's always the wrong time, isn't it? Should always do that before you come in. Our very distinguished panel, and let me briefly introduce them, and we'll let them. First, Sahar Nasr, welcome. Sahar is the Egyptian Minister of International Cooperation, and she's also a professor of economics at the American University in Cairo, and she holds many other important offices, National Coordinator of the National Committee for the Follow-up on the implementation of the Sustainable Development Goals. Welcome. Mark Lowcock. Mark is the Permanent Secretary for DFID, the Department for International Development. DFID, I think we all acknowledge, has been one of the world's leaders in terms of development thinking over the last 15 years. And so I think a lot of that is owed to Mark and his team. Kyle Peters, many of you will know Kyle. He's the Senior Vice President of Operations for the World Bank. We've known each other for a long time. Then we have Nena Stoiljkovic at the end. Nena is a Vice President of Global Client Services in IFC. She's one of two Vice Presidents responsible for IFC operations. And Arunma Oteh with us as well. She joined the World Bank as Vice President and Treasurer in September 2015, and she was previously the Group Treasurer at the African Development Bank. And she's also been the Director General of the Security and Exchange Commission of Nigeria, so welcome. So we have a very distinguished panel to address these issues. Let me start off with Sahar. How do you see the current situation macroeconomically in terms of the development challenges from the perspective of Egypt, your country? What are the main challenges and what are you looking to the international community to do to help?
Thank you.
I think you will need a mic.
Thank you for a lovely panel. And let me start by saying what are the main challenges, macroeconomic challenges in Egypt. Is achieving sustainable economic growth. That's a major challenge. And what are the main drivers and sources of growth? There has been a decline in the revenues that is coming from several main sources, such as tourism. So that's creating a major challenge. There has been issues related to unemployment rates. That's another challenge. And lagging regions. There are regions where poverty rates and unemployment rates are higher, and I think that's an area that also we see as a major challenge. We need to bring in more private sector investment that has deteriorated over the past years because of the uncertainty in the environment. Now it's getting better, so it's how to bring in the private sector to contribute to sustainable private sector-led growth. And lastly is we need to work more on the social development overall, whether it's education, health. Investing in human capital is critical, and we see that as a main driver for growth, and that's where we're aiming for. I see that as major challenges. Of course, the overall macroeconomic environment is important. That's something the government is focusing on. We're working on various fronts, fiscal reforms, we're working on monetary reforms, and more important, we're also reforming the energy subsidies. That is a large bulk of the deficit.
Thank you very much. I think that gives us a good picture of what countries are doing in order to deal with the situation. We'll get back and discuss more some of these issues. Mark, how, from your perspective, do you see development partners working with countries to deal with these questions? And what are the sort of main areas, at the fringe that DFID is thinking about to deal with these?
Okay, well, I mean, firstly, I fully agree with the way you tee up the problem. I mean, I think there are a lot of countries facing unusual financing requirements at the moment, and the normal sources of resources available to lots of countries are under various different pressures. Obviously, for the commodity producers, reductions in commodity prices has affected their ability to finance more of their own development. The private flows, as we know, you said, Alan, have weakened. Aid flows actually globally remain very robust. The OECD published the 2015 numbers yesterday, and they're on some measures at highest level ever. But when you look below the surface, you do see some things happening on aid flows. You see, because of exchange rate adjustments, the real value of those flows under pressure, and you also see some changing priorities, especially because of crises. And especially because of migratory and other pressures. So you see a lot of challenges in terms of aid flows. We, as you know, in the UK, attach a lot of importance to the 0.7 commitment, and part of any plan to help finance countries dealing with the current set of problems ought to be the aid system, and we think it would be nice if everybody met the 0.7 commitments. But we need to look in some other directions as well. Mm-hmm. I think the main thing I would like to say about the financing issue maybe doesn't fit so well in the innovative space. You might say it's a sort of vanilla solution, but there is one big available underutilized set of capabilities and resources at our collective disposal, which we could make better use of, and that's the multilateral development banks, especially since we're being hosted by them, the World Bank. I just want to say a word about how I think, and it's timely because we're doing this process with the forward look and so on, how I think we should be thinking about the capabilities of the World Bank to deal with this set of problems. So firstly, there are sets of countries which, from where I look, need more and different kinds of help from the World Bank. I would like to see a bigger World Bank. I'd also like to see a better World Bank. So, for example, the very poorest countries, the fragile and conflict-affected countries in particular, just need larger volumes of cheaper money from the bank. Many of them are not able realistically to access the credit markets, but they need larger volumes than they're getting at the moment. Secondly, there's quite a lot of countries who've made good development progress and in some cases have been going to the capital markets. But if we changed our toolkit, would have different access to different volumes and prices of official resources. I like the IDA Plus proposition, which is about borrowing against the equity essentially in IDA to free up, depends on the modelling you do, but maybe $20 or $30 billion of resources over a period. But I also think there's scope for some of those countries to access IBRD in a way that hasn't been happening, maybe to the extent it could. And then there's a set of countries dealing with global public challenges. Countries in the Middle East, for example, which are taking on enormous burdens and currently don't have new tools and new forms of assistance available to them in a way that we think is necessary to help cope with those burdens. Countries like Jordan and Lebanon, for example, dealing with very large numbers of refugees who have access to IBRD but are getting to the limits of the debt at that price they can take on.
Sure.
So we would like to see, as part of the forward look discussion, a rethinking about the way IBRD in particular can respond to a more variegated set of clients. We think it's good that there are a group of investment grade clients essentially who continue to want to access IBRD, but we think there's other categories of the sort that I've mentioned who should also have access. And so that's the set of things I have in mind in terms of a bigger bank. In terms of a better bank, one of the things that I hear most commonly, especially from finance ministers, is they would like the bank to be faster and more agile and more client responsive. Now, I think it's important to say from the outset on this that the shareholders, as well as the institution, have a set of responsibilities there. And I do think myself that when we look back over the last couple of decades, we haven't got the right balance in things like safeguards between the issues and proportionality and speed and agility. And certainly the UK's perspective, as we bring our voice to the current review of safeguards, is we need to do better in getting that balance. But it's not just about the shareholders. I think there's a whole set of issues about processes, systems, behaviours, culture, which, if we can address them, would collectively make the bank much faster and better for its clients, which needs to go alongside bigger. Now, one of the important things to recognise about resourcing the bank is, for a lot of the things that the bank does, is resourced by countries like mine from the ODA pot. So if we give more money to IDA, that's less money available to give, say, bilaterally to some finance ministers, including some of my friends in the room here, or to some other multilaterals. On the other hand, with IBRD, we get leverage. Yeah. And if we think about a different set of uses of IBRD resources, in particular, if we broaden the client base, you can make a good case for taking some money out of the generic ODA pot, putting it into maybe a capital increase, provided you're not just repeating the current lending patterns. If all you're doing is repeating the current lending patterns, candidly, what you're doing is taking more money out of the ODA pot for countries like mine and reallocating it maybe not to the top priority. So you have to look at the toolkit, in our view, and the instruments and who's benefiting as well as capital on its own.
Well, thank you very much, Mark. You've given us a lot to think about, and I think you've given Kyle a lot of work to do. Okay, Kyle. Now, tell us a little bit about how you see the situation and innovations that the bank and multilateral agencies do or should be doing.
Okay, thank you very much, Alan, and we're very happy to be here as well as sponsor this event, really to talk about the challenges and how the World Bank, and of course I have the World Bank group is responding. Of course, I have colleagues here who also have a lot to say on this. Let me just structure my remarks in three ways. I mean, first, I think the context that we're dealing with right now, and I think, Alan, you set that out fairly well, in the sense that there's a huge long-term global agenda. It goes around demographic changes that are going on, rapidly growing labor forces in Africa and South Asia, aging economies in other parts of the world, the whole changing nature of globalization, connectivity, and what that implies for development models as we go forward, urbanization, where we're facing a situation where 60% of the world's population are likely to live in cities. Almost 2 billion will maybe live in urban slums in the next 2 decades, and then a lot of pressures on our resources. So there's a very large long-term agenda that's fairly well defined by the SDGs and our need to respond to the SDGs. And at the same time, two other things that you pointed out that we need to react to is, one is we're in a very difficult global context right now with a slowing global economy, end of the commodity super cycle. So fiscal buffers that have been eroded through the 2009-2010 financial crisis. So I think we have a short-term need to respond to a slowing global economy. And then we're also confronting where the risk and vulnerabilities, I think, are much larger and appear to be occurring with much more frequency. So we have a long-term context, a near-term economic context, and a risk and vulnerability context. And I think that kind of sets the stage for the way we're thinking in the World Bank about the way forward in terms of innovating in the financial space, on our instruments, and in the way we work. And I'd say, I would like to point out that I think we've come we've come a ways in that. I mean, we've spent a lot of time in our budget support operations thinking about how we can have deferred drawdown type options, so that either for catastrophic events, which would allow countries to put in place disaster management plans, and then if a natural disaster comes, to draw on those resources. We've also have something similar for macroeconomic crises, so they can put in place a reform program and then have money available to draw over the period of time. We've done a lot of work, as you know, Alan, you helped us very much in trying to modernize our set of instruments. And putting in place, we had an instrument for policy, which is our budget support. We had an instrument for projects, and now we've put something for results and programs in the middle. So we have a more complete panoply of instruments, so that really support projects, policies, and also programs. We spent also a lot of time enhancing our guarantee instrument to work on the leveraging. So I think we've been really quite trying to actively, on the instrument side, innovate. I think Arunma, my colleague, will speak a lot about what the Treasury has been doing in terms of financial products, so in terms of helping currency swaps, helping in local currency markets, and things that also greatly facilitate our ability to engage with our clients. And we've established some public-private partnership group that's really trying to help us and help countries think through public-private partnerships. And so as we look forward, I think we have, let's say, four items on our agenda and things that we're thinking about very actively in the World Bank Group. The first one is one of the issues that Mark raised, which is really about how do we have an engagement model that engages across the entire set of clients we have, starting from the most fragile and the most low income, going all the way up to the high income countries. And are we thinking about both our instruments and our financing so that we're able to sort of make the movement across these segments a little smoother and a little more fluid, recognizing, as Mark pointed out, that we're looking at the equity that we have embedded in IDA to try to serve countries as they transition from a low-income IDA status to a middle-income status. So can we leverage the IDA resources we have to help countries through that process? Can we look at do we have enough resources on fragility in low-income countries, and should also the transition from fragility into a sort of a normal low-income country has some discontinuity. So to look a little bit at how we finance across the range of options. And I think Mark made the point about, and then at the high income range, do we have the right set of instruments? Because what happens typically at the higher income ranges is that countries we have relationships at upper middle income countries and some high income countries on the knowledge side or on the reimbursable side. And then they tend to come and go from borrowing from the World Bank depending upon global conditions. So can we look at what are the facilities we have to bring them in and out, and so that we have a more sort of, let's say, seamless and more fluid way of dealing across the income categories. And that would apply not only to the financing, but to the types of instruments. Do we need different instruments, different procedures, different processes at the low income as we have the high income? I think the second set of innovations that we're trying to think about is really, can we expand our contingent financing instruments? And as I said, we did some things on the budget support, but really we're working on a pandemic facility. We're looking at, we're doing some innovative things in Jordan and Lebanon with DFID and other places to look at how we can help countries that are really experiencing regional, global bad spillovers, and how we can finance that. So that would be on refugee financing, and can we broaden that into a more type of emergency type facility or crisis type facility also, that not only we have in our IDA toolkit, but do we also have it for middle income countries? So there's and we're working on that first in the Middle East, North Africa financing facility, the pandemics, and then how we can more creatively finance climate change, both adaptation and mitigation. We have just sent to our board a climate action plan. So I think for us is that, okay, let's look at our risk instruments, our contingent instruments, and do we have instruments that are fit for purpose for the fact that there's a frequency and intensity of risk and vulnerabilities have really seemingly increased, and we need to be able to react more quickly and provide appropriate type of financing. And then the third thing is just the whole part about leveraging, because I mean even if no matter how generous we can leverage IDA, how generous we can expand our IDA capital, we really have to have more instruments that crowd in the private sector and bring the private sector. And then, of course, we have a continuous battle on becoming faster, more agile, and leaner institution. I think we're trying to do a lot of things. We're trying to even think of some new ways of working in terms of procurement and the safeguards reform that we'll do. And we need to be conscious, as Mark said. And then what can we do to be faster and more agile in terms of our processing and our culture and our behavior, which for us is a long-term journey. So let me just leave it there, but I will say that we are working very hard on the instruments and on trying to have a better bank. But I also think that we would encourage our shareholders to think about, given the enormity of the challenges and our unique position as an institution that is both global, in other words, is acting across all countries in the world, as well as one which has very deep roots into local economies, is that we are how we can expand our balance sheet, be it through a robust IDA replenishment, a more active use of leveraging IDA equity, or the financial expanding the financial capacity of IBRD, IFC, and MIGA. So let me just stop there.
Thank you very much, Kyle. A lot to talk about. Arunma, from your perspective, I mean, you've seen it from all sides. You've seen it from the countryside, you've seen it from the African Development Bank side, now you're at the World Bank. What do you see in terms of innovations that the bank group might do? How is the bank using the capital markets? Where can we move forward?
First, I think that in the times that we are in, which are really challenging, you have to rely on innovation. And I'm a proud staff of the World Bank because I can say that the World Bank has a track record of innovation. And many people may remember that the first currency swap was done between IBM and the World Bank in 1981. So that track record of innovation has always existed. I mean, today people do currency swaps and think, oh, it's nothing. But in 1981, it was a new thing. Being at that forefront means that we've tried to remain a leader. We also rely on partners like DFID. And what Mark was saying about a capital increase was music to my ears, because indeed, one of the reasons we've been a market leader is that we're a AAA rated institution. It's part of our brand. We're able to go to the markets and ask them to think about new ideas in ways that they haven't thought about it before because of that brand. And one aspect of that brand is, of course, our AAA rating. So it's the partnerships, it's our AAA rating, it's access to markets, and is of course the creativity of a treasury team that I'm very proud to have given the opportunity to lead today. In terms of why I say this time is even more challenging, first we have a president who's challenged all of us to think more creatively, and traditionally people don't look onto treasury as the place to go. But when you're thinking about health issues, but as Kyle was saying, we're thinking about how we can make sure that we respond, or that the world responds better to an Ebola-type crisis. And Alan, you asked about my perspective. I was living in Nigeria and lived the fear and fright of what would happen if Nigeria had any of the experiences that Liberia or Sierra Leone or Guinea had. So joining the World Bank 6 months ago and realizing that under the leadership of President Kim, that we're thinking about making sure that the weaknesses that we had in response to the Ebola crisis does not happen ever again is something that I'm proud to associate with and still be a finance professional. I was on the board of the International Financing Facility for Immunization, and I see some of the team here, and the World Bank is a treasury manager for the International Financing Facility for Immunization. And it's something that I'm extremely proud of, because the International Financing Facility for Immunization was a way that you would leverage pledges that will be made at least over 20 years, leveraging the capital markets and making sure that those resources are available today on a predictable basis. And you said that DFID has been at the forefront of development thinking. This was one of the things, along with other donor partners, that they initiated. And today, we issue vaccine bonds and people think that they're normal. But 2006, it was still an idea. In fact, Mark, you may remember, you had a bigger dream, which was to have an IFF. And people were not as supportive of it. And then you said, why don't we do IFM as an example. I do think there are opportunities to do other pilots today. What we're seeing is that there's a lot of, and Carl mentioned that, emphasis on risk management. So we're finding we're doing a lot of disaster risk type, or developing a lot of disaster risk type products, whether for middle-income countries or the very vulnerable countries. I mean, some of the transactions we've done, whether they're catastrophic insurance type facilities or catastrophic bonds, have been targeted at the most vulnerable, either in the Pacific Islands or in the Caribbean islands. We're working with Kyle and his team and other colleagues on structuring something that responds to the refugee crisis. And so what is fascinating is that as a finance professional, you can come to work and essentially be able to tackle some of the world's most difficult challenges, whether it's pandemics, whether it's a refugee crisis, and to have a team around me that focuses on the market and says to the market, your insurance professionals work with us in trying to understand how we can deal with these issues. So I would say we've got the track record. We couldn't have done it without support from donor partners. But our brand is also driven by a high-quality institution. So when Mark says a bigger bank, a better bank, I do want to emphasize that supporting us and maintaining that brand means that we can then go to different people and say, why don't you think about these issues? Because we have access to markets, we have access to market participants. And from a treasury point of view, we cover the gamut of client countries, whether fragile countries or not. And sometimes we provide instruments that pool risks so that it's cheaper for the countries. We partner, of course, with donors who can provide the initial fillip, in some cases provide the initial premium. And then when the countries feel comfortable, then they can take over. So I thought I'd stop here, but I think this is an institution that has a track record, and I hope Mark and others can help us continue to do this going forward. Thank you.
Thank you very much, Arunma. I'm going to turn to Nena, but before I do, just to ask one question, because it came up with Mark and Kyle and Arunma, and this is about the capital and the extent to which you have headroom right now. Does the institution actually have headroom to deal with these problems, including the shocks, and to what extent? I mean, I think it's true that after the initial global crisis, there was a question mark about how big the demand for IBRD would be. And I think we've all been quite impressed with the volume of demand for World Bank lending. So it would be interesting to hear your perspectives on that particular question.
As a treasurer, I'll always make sure that we protect our AAA ratings. But what it means is that all of Carl's requests, he's not able to honor all of them. So my perception is that there's more being asked. That there's more being asked of the World Bank as a group than we can honor, because part of why we're able to do this is the brand. And so having the right mix of making sure that we have, and we're at capacity. Is what I would say. I mean, and there's much more being asked of the bank. And one of the things that I want to emphasize is that in addition to our traditional lending instruments, we're also being asked to work on the global good issues. Yeah. Access to markets, access to market participants means that the strength of our institution is important in being able to do the pandemic risk type, the refugee risk type issues. So we will try and make sure that we're managing a first-class institution, but I think that if we're going to be doing all of what we're being asked to do, we probably need to start thinking about raising more capital.
Raising more capital.
Yes, and I will like to say to Mark that we truly, even in Treasury, imbibe the billions to trillions agenda, that every dollar must do as much as it can. So the grant resources are absolutely essential. How we use it is also very, very essential. So I don't know if I've answered.
Yes, I think you've given us a good picture. You will need capital, but you're trying to leverage everything you have, really. Mark, we'll get back to you, or do you want to make a quick intervention? I'd like to get to Nena as well. Huh? Okay, let's go to the IFC. There was a paper recently, wasn't there, called, what was it, Billions to Trillions? And everyone knows that you're not going to get trillions without private money. And I think one of the features we see today is that many government budgets are under stress, but there's a lot of money in the markets, in all sorts of places, looking for yield. So how does the IFC see this and the role of bringing in private financing to complement public financing?
Thank you, Alan. I think you said it. If we want really to eradicate poverty by 2030, if we want to implement the SDGs in only 15 years, even less so, we absolutely need to work with the private sector, because trillions will come mostly from the private sector. You probably know that about $1 trillion goes every year into emerging markets, and about 150 billion of ODA, and Mark, correct me if I'm wrong. But the problem is that even within that trillion that goes into emerging markets, very little goes to the countries that Mark talked about. And we in IFC have started looking at what would it take for more of the private sector to go into some of the more difficult markets, because those countries will have to grow most. That's where most of the poor live. And we believe that if we can find a way to get the private sector into those countries, that we would be able to solve some of the market failures. Just to mention a few that we struggle with as we look at the countries and the private sector engagement. When we work in agriculture, obviously we're aware of the fragmented value chains in agriculture, which prevent some of the private sector to come in. Or let's say in power and transport, they are largely dominated by public sector monopolies, which are very hard to break or compete against. Or undeveloped capital markets. I think Arunma mentioned that. If that doesn't exist, there is no way that all the financing can come from IFIs. I mean, there has to be a vibrant local capital markets to continue to finance those needs, high regulatory risks that make it more unpredictable, more risky for the private sector to come in, and then non-competitive markets again are turning off the private sector to come in, and especially non-contestable when there are no laws or private sector can rely on. But then once private sector comes in, if we find a way to bring it in, then obviously jobs will be created, growth will happen. And there will be probably the post-conflict countries will be less prone to go back into conflict because of the job opportunities. I think Kyle touched on this. The only way how we can bring private sector in to solve some of these market failures is to work together across the public and private sector. Public sector will have to provide some of the conditions on the policy and sector reform side to create opportunities for private sector to come in. But once we have those pioneers, the first of its kind, IPPs or first private operators in those countries, they will then in turn also push the governments to continue to change the regulatory framework and to bring more private sector in. So it is a kind of a circle, and where I think there is no way to do it just by IFC working alone, or we absolutely need the help of the World Bank and MIGA. And then because this session is focused on financing instruments, I just wanted to mention as part of this what would it take analysis, what came out of it. We think that we need to put a lot more efforts into building capacity, capacity of the governments, which, as I said, we need to rely on the bank to help us with, especially stronger institutions, more transparency, better governance, but we also believe that some, especially the local regional players, need some building capacity at their own level, which we can do through advisory services, technical assistance. So that's one block of what has to happen. The other one, and the big one, is de-risking. I think Kyle touched a little bit on that. How do we make the risk acceptable for the private sector to come in, especially in some of the circumstances that I explained or described? And we are now thinking of taking to scale some of the instruments that we are already using, especially PRGs from IDA, to de-risk projects, or working more closely with MIGA, again to de-risk those transactions. We're also thinking a lot about local currency solutions, because many sectors require local currency solutions, and simply it's impossible to come in with foreign currency funding. We're also working with IDA and some other potential partners on first loss guarantees, again, to mitigate the risk and make it more appealing for the private sector to come in. And you're all aware of the blending instruments that we use, where we would work with donor funding. I think Arunma mentioned it, where we would use that for the very first of its kind projects, risky projects in a particular sector, new country, to de-risk them and again set the signal that this can work for the private sector, so that more players will come. And we have a great experience of, after years of doing a bit of blending, that actually some of, especially I would say in the renewable energy sector, some of those projects actually became viable without any blending. And the third area is, and I think Kyle referred to it, is once we develop those projects and find structures that are de-risking them, we can then leverage a lot more. We can bring other partners into those structures, and we have found a way, we call it an MCCP platform, where a partner can invest alongside IFC portfolio, and it can be by group of countries or by sectors, which is a great way to mobilize other partners' capital. We also are experimenting on the equity side, as you know, with high risk circumstances, we need more risk capital, and that actually comes from equity, either through SME ventures specifically dedicated to FCS and low-income IDA countries, but also through our asset management company, where we are mobilizing quite a lot from other partners. And I will just stop here and then open up to more during the Q&A session.
Thank you very much. We're going to open up the Q&A session, but before we do, I'd like to just give a chance to our external participants to comment on what they've heard, and also on what they're looking for. Clearly, there are a lot of things going on, including what I think this very interesting issue about ways of using official development assistance to de-risk and leverage very strongly private capital inflow, which is a very important issue. Sahar, what is your reaction?
My reaction that I think I should have come last.
Well, giving you a chance, now.
Okay. I think on financing, before I even go to innovative, having heard Kyle and Nena and Treasury, I think timeliness matters. I think the issue of time, I think we have to acknowledge that the process takes a long time. And when we're talking about financing, and I've heard a lot the word risks, I think also timeliness matters. So how long does it take the bank to prepare any operation, project financing, whether it's IFC or the bank group? Then I think another element that I'm hearing a lot of products that you're referring to, not all your clients are aware of the different products. So I think you need to reach out more to your clients and to talk to your clients and disseminate these products to them. Treasury and MIGA, I know they're not sitting here, but maybe somewhere their dissemination of your products is really limited. And I'm not only referring to Egypt, but other countries that I interact effectively with. And that's something you need, and you can realize that from the portfolio size. I think that's important. I want to also raise the issue of envelope, because financing is how much you're willing to finance each and every country. And the mechanism, I think I want to hear more on how that's calculated, because I don't think it takes into account risk on the country. Maybe the higher the risk, maybe the less likely the smaller your envelope. So I mean, you're talking about aid effectiveness and supporting low-income countries or countries that are vulnerable. So how do you take that into account? Joining forces, IFC with the bank. I think I know that the bank keeps on saying it, and I know it's there in all the slogans, but that's not true. I look at the projects, energy projects, not of competition, in fact. Not just not working together, but you're competing on many fronts. So that's something I want to highlight. donors, DFID has been providing a lot of support, but I mean, not just DFID, but in general, working together with other institutions, bilaterals, African Development Bank, I mean, EBRD, everybody, depending on the region. I know it differs, but I think the donors need to put their act together and work together better, because at the end of the day, if we're really after supporting countries developing, low income, middle income, I think it's important that you have an integrated solution. And part of having an integrated solution is working together as one team and seeing the comparative advantage of each institution and take it forward. And I totally and fully agree with Nena that capacity building is essential, because no matter how much financing you allocate to countries, if it's not packaged with international knowledge, experience, capacity building institution, because you're at the end of the day promoting sustainable economic growth, and sustainability will only happen when you build the capacity of these institutions that they can move forward in whether economic growth, development, overall. I think capacity building, the bank needs to put more effort and more funding in capacity building of institutions to ensure real impact on the ground. Then I want to acknowledge the bank for putting forward innovative financial products. That's something the bank has done. P4R is one good example. That's something, because at the end of the day, you're after results. It's not just a reform program, and it's not just investment loans that take years to materialize through the lengthy procurement. And I know the bank has been doing a lot of streamlining, but it still did not happen up till now. So I think that's more needs to be done on that front, because still investment loans are important when you're talking about big infrastructure projects. P4R would not be the perfect instrument. Hence, you still need to innovate more on your investment loans. On the policy loans, I think still more work needs to be done, because usually countries proceed to policy loans when there is macroeconomic, and that's what I was highlighting in my introductory statement, is usually countries go to policy loan when there is macroeconomic difficulty. And that's why they proceed with macro loans. They need support, and it's not just putting the country on the right track in terms of policies, but also providing the financing on a timely manner, and taking into account and being very careful that the program is labeled and very clearly put forward as a homegrown program, because there is a huge reputational risk overall when there is the perception in the public and the stakeholders and the civil society that it's not driven fully and with the full ownership of the country. And I will stop here, and I should have come last.
Well, thank you very much again. Mark, do you want a couple of points on this? Then we're going to open up.
Well, Alan, thanks very much. I mean, I wanted to come back actually on your point about kind of levels of demand. I mean, clearly at the moment there's a spike in demand, as there was in 2008, because of because lots of countries have got a financing problem. I'm quite worried about the financing problem, actually. I think there's some short-term dimensions to it, but there's also some much longer-term dimensions to it. But if you look in a more steady state sense, over the last 40 years, the bank has grown its nominal activity by about fivefold. Yeah. The global economy, in nominal terms, has grown 13-fold. Or to make a similar point in a slightly different way, as it was put to me by one of your colleagues, Alan, at CGD, setting aside the crisis years, net IBRD lending now is less than it was in 1979. Now, one of the reasons for that is because access is in practice constrained by because demand in practice is constrained by access. Yeah. So, and this is partly about the whole speed efficiency thing that Tara has referred to, but it's partly about other things as well. So there are certainly lots of finance ministers who I talk to who would be very interested and would be creditworthy enough now to borrow from IBRD at 4%, quite long-term money, much cheaper in some cases than 4%, but for 15-year money. But in fact, in many cases, have been going to the Eurobond markets at 8, 9, 10.75%. Right. So, for me, what I was trying to talk about at the beginning is a package. A bigger bank, it has to be alongside a better bank. And especially all those things that the clients say. I was very interested also, though, it's not just about the clients, I'm very interested to see that in the staff survey, the last annual staff survey, one of the top 2 things the folk in the institution were talking about was the need for simplification. Now, I said at the beginning that a lot of that stuff arises with the shareholders, and we need to take some responsibility. But it's not just us.
Thank you very much, Mark. Okay, let's open up to questions. This is your chance to ask. Please, if you can come up, there is a microphone, and please identify yourself and go ahead.
Okay, thank you. It's on. My name is Iftikhar Mustafa from the Global Agriculture and Food Security Program. My question is not on agriculture, but related.
Is it working? Can you hear? Yeah. Okay, sorry.
Working? Okay, fine. One thing I have not heard today is the remittances. So in some countries, as you know, more than $10 billion annually are coming to the country. And we also know the importance of domestic resource mobilization in the context of SDGs. So the question is, bilaterally or multilaterally, what advice or what is your thinking on how to mobilize these remittances, which mostly are being used for primarily consumption purposes? Thank you.
Thank you very much. Let's take a few questions and then we'll throw them open, please.
Hello. Working. Zafar John Khotamo from Islamic Development Bank. Just a question about to panel, because the theme is innovative financial solutions. What is the sources of innovation for this financing that you are looking for? Because we much talked about bank inside being innovative, but where this innovation, inspiration, sources, where I look for? For example, are you looking also beyond the balance sheet, IBRD, like assets that are available in these developing countries who have like all these problems, not only government, but the assets like people, entrepreneurial and all this. How you can like, for example, just an analogy was how the financing money was brought through innovations to housing market in US. So, I mean, it had negative sides, but also it had positive side. So how we can bring this positive side, for example, and managing the risk so that like money comes to this developing, which are available in savings, but at the same time, risks are managed. Thanks.
Thank you. Let's take 1 or 2 more, and then we'll turn over to the panel. So we have a question on remittances and mobilization, and then also broader leveraging. So both leveraging questions, please.
Thank you for this opportunity. My name is Bokwe Burnley, and we've just had some really great things about, the passion to build capacity. That's encouraging, I'm sure, for everyone. But my concern is especially for the African market. That is the new and emerging market. And I'm wondering, and I'm dare to say I would suggest, make a recommendation even, that as far as building capacity for Africa, we should really think of tying capacity building for Africa with character building. And I say that as an African, because Ms. Oteh mentioned about, disasters and things, and it is somewhat embarrassing for me as an African that with the number of disasters that we've had in our continent, that up till now, we do not still have organizations that are really equipped to deal with that, you see. So, yes, we do want capacity building. We need it in Africa, but I really want to encourage donors and even leaders of African countries, one, that we take responsibility, that this is long overdue. and that we put it as an important priority that, hey, we want to build capacity in Africa. This is an emerging market, but we've got to build character so that 10 years from today, we don't sit in another meeting like this and Africa is still the issue. Thank you.
Thank you very much. Shall we take one more, the gentleman? Yes, please. Then we'll just hold and go back. Please, go ahead. One more.
Sure. My name is Peter Nudecker. I'm the Chief Financial Officer for Safe Water Network, which is an international water organization. The majority of my background is actually in the private sector, and my question is about the private sector. It's been mentioned a few times by, I think, Kyle and Arunma. And my question is, what is it going to take, and what's your level of commitment to perhaps shift the paradigm somewhat so that you can leverage the private sector more effectively? The private sector holds the majority of capital, as we know. They have tremendous influence on the capital markets. And there's also, in my view, a significant amount of pent-up demand, not only to provide capital, but to provide human resource and in-kind. So really it's around, are there opportunities for innovative financing mechanisms? I think IFM was mentioned. And are there opportunities for perhaps IFM-type financing institutions where you can leverage, I think, Marcus, you may have mentioned, leverage equity to get more funding?
Okay, thank you, why don't we turn to our panel for some initial responses to these. I mean, a lot of these questions are actually about leverage. They're about using remittances in a more developmental way, if that's possible. They're about broadening the concept of leverage. So we're thinking about broader aspects. Housing was mentioned. And also the whole question about the private sector and the use of IFM-type mechanisms or broadening these sort of mechanisms. And then there was also a question about the nature of capacity building. So who would like to kick off on this? Arunma, perhaps?
Sorry. If you permit me, I'll start with capacity building because I think Sahar's point around it is extremely important, and the need for us to do much more. We have a team in Treasury that basically covers the world in terms of capacity building, and I was trying to get the stats of how much we're doing, because we are the first to confess that we're not doing enough. Debt management is, for example, a big area for us, and sharing knowledge about our products is also a big area. And in the recent past, we've done 400 clients, debt management, 600. I will focus a bit separately on the central banking area because it's a product line for us. But I couldn't agree more with her as to the need for us to do more. One thing we do in Treasury is we believe that the partnership with Kyle's teams is extremely important. And we tend to almost do the train the trainer, i.e. that if we can't do it ourselves, so basically leverage our operations colleagues the most. But I do want to say that the needs of our clients are very diverse. 15 years ago, when we decided that it may be necessary for the World Bank to start managing money for central banks. I understand that the board discussions, some people were supportive of it, others were not quite sure. 15 years on, we have 57 clients and we're managing $20 billion, and we have 20 clients waiting, queuing up so that they can be part of this program. What they say they like about the program is that, of course, we can manage money like commercial clients, but it's that we're an honest broker. They can trust us. But we also have a model that means that we associate the management with capacity building, because we ultimately don't want people to remain with us. We want them to train and do it on their own. But I have to say that we haven't been successful with getting people to... we've built capacity. We get told by our clients that a number of them end up in the commercial sector, And so they're constantly relying on us. But we see that there is absolutely, I mean, we've seen how many of those central banks have evolved over the years. So it's a product line which evolved organically, but it's an important product line for the World Bank Group, particularly given the issues around the macroeconomic issues, having resilient economies. I think strong central banks are extremely important. I do agree with a lot of the discussions around how we can do much more. I agree that we can leverage remittances. There are a number of other of various ideas. A number of countries are issuing diaspora bonds that are following the flow of remittances. Some countries are trying to see how they can catalyze more resources on the back of those remittances because they're constant flows that come to the country. And then we've got issues like, I mean, I thought you were looking for very highly sophisticated, innovative instruments, but one of the greatest success stories in technology that everybody knows is M-Pesa out of Kenya, using telephones for mobile payments. So I do believe, and Nena, my colleague, talked about it, that there is a lot we can do in domestic resource mobilization. We, whether the IFC Treasury or the World Bank Treasury, we feel that we've been a leader in this respect. We're entering new markets with the brand of AAA rated issuers, bringing investors into those markets that may not have gone into those markets initially, but they start with us, and then they become comfortable with those markets. We're also bringing best practice to those markets when we issue. So as we continue to make sure that we're not exposing clients to currency risk, as we continue to try and develop the domestic capital markets, that idea that an issue of repute can come to that market is extremely important. When I was the head of SEC Nigeria, both the African Development Bank and the IFC issued Niger bonds, and I know what it did in terms of people understanding, oh, this market is actually a market that one can look at. I could not agree more with the comments around the housing sector. I do think that the housing sector is critical to the development of any economy. As I used to say when I was in Nigeria, it gives plumbers jobs, but it also gives investment bankers jobs if you truly develop the secondary market. So the comments I would endorse.
Yeah. Thank you. I have several. Nena, do you want to comment?
Maybe just to complement that very quickly. I mean, innovation comes mostly from our clients, and from in the case of IFC, it's a private sector client who needs a solution, and I see it as replicating what has worked in some places to some countries that have a similar type of environments and conditions. That's also innovation, when you bring something new to a market where it doesn't exist, but you learned it in another country. I think of the energy efficiency products that we launched in Russia and China, we now are replicating pretty much everywhere. Just was one example. And the one where it comes from the clients is where we, for example, we were trying to set up a platform that will allow us to finance higher risk infrastructure projects. We went to insurance companies to work through the solution with them on what would it take for them to invest with us in that platform. And the requirement for them was to de-risk that platform by leveraging it with some donor grant funds, and that's exactly what we now call MCCP for infrastructure. So again, it's a combination of things, but let's not forget about the simple replication of what has worked in some other places when conditions are ready to do that in other countries.
Thank you very much. Sahar has to leave us to get to another meeting, so we're going to give her the last word for her, please.
On the scaling up, private sector scaling up, I think I need to here also highlight that the IFC has done a great job last week in Egypt, where for the first time the private sector is coming in a utilities project, sanitation, Abu Rawash. This is an area that has been negatively affected by poor sanitation services, has affected has adverse effect on environment, on health, hazards in the population there. So IFC, they've managed to do a great job in scaling up, bringing in private sector, and not only that, but also bringing in EBRD to co-finance the project, which has already been financed initially by the World Bank. So I think there is great opportunities in scaling up, and in the private sector, you just need to do a bit more. So that would be the first ever utilities project in Egypt where the private sector is financing. And I think it's great because it also had positive implication on the tariffs, the pricing, and will allow private sector to come in different utilities, hopefully. On the housing sector, this is an area where the World Bank Group together did also a great job, and their treasury had helped too. But you need to do a bit more. But on social housing, that's a sector that the low-income people had no access to the housing market through developing the regulatory and legal frameworks through mortgage finance. Private sector is in. You have mortgage companies have been established. There is a liquidity facility that has been established through the support of Treasury. So when everybody come together, I think it makes a huge difference and you see solid impact on the ground. And just a very quick comment from the colleague from Africa. We need to do more South-South cooperation. The World Bank can help, but we can still do it alone if they're not stepping in. Thank you.
Thank you very much.
I'm sorry, I have to leave for the G24 meeting. My sincere apologies.
Thank you. Thank you for joining us. Thank you. Thank you. Let's continue. I think both Mark and Kyle want to say something in response.
Well, two quick points. Just picking up your point about M-Pesa, probably lots of people know, we gave a grant to Vodafone, which got M-Pesa up and running. What's less well known is we also provided some technical assistance to the Central Bank of Kenya, which put in place the regulatory environment that made M-Pesa legal. Now, this is sort of illustrates the point I wanted to make in response to our colleague from asking about the private sector, because actually a lot of the biggest issues still are in the space we haven't talked about so much this afternoon, which is the investment environment. So, the policies, the regulations, the institutions, all those things about property rights, we still need a much stronger focus on that whole space. The other thing, Alan, just briefly, I wanted to flag on innovation is I think we're just in the foothills of exploring all the potential for insurance-based support mechanisms. So we are about to capitalize, to make an investment in, not a grant, but an investment we hope to get a return on, in basically a parametric climate insurance proposition for Africa. Because it turns out that adverse weather events in Africa which can affect harvests are inversely correlated with weather events in the eastern US. So there's a hedging opportunity. And I think there's a lot of other insurance-based propositions which the development community can help get going, but in a way which will generate returns. And I think we should get more of the high-powered brain power, available to all of us, focused on those kind of opportunities.
Thank you very much. Kyle, did you want to comment on this? Or?
I'll come back on some of the other things. I just wanted, in particular, two of the questions, one on the remittances. I think we have a very active program on trying to facilitate remittance transfers, and we're doing a lot of work on with banking systems and mobile transfers and things to really try to facilitate the flow of remittances, because I think it's right. I mean, in many situations they're very costly, and a lot can be done on the efficiency side. On the person who worked in the water network, I think one of the challenges we face on this leveraging thing is that there does seem to be a lot of private sector financing available, and there seem to be a lot of projects in people's minds, and that there's this middle space about how we can develop make these projects bankable and things that that the private sector finance is willing to go into. And I think we've established what we call a global infrastructure facility to really try to help work with trust funds that we've gotten from many donors to try to really work to sort of develop some of these ideas into what we call bankable projects, and thereby really try to facilitate the flow of private sector money into the projects, because it is kind of a excess supply of projects, and seemingly private finance, which is going in a very concentrated way into only a very few economies. So the question is, can we do something to sort of de-risk and more develop these projects so that we can help bring in the private sector? I'll come back on some of the other efficiency points, but you probably want to get maybe some people will want to.
I think we actually have about 8 minutes, so I'm not sure we have enough time for another round. I'm sorry about that. But so why don't we give the opportunity to you to come back now?
Yeah, I don't know. I need to come back. I also, as Arunma was pointing to me, that we are doing a lot of work on anti-corruption. We have a governance a strategy. We're working on extractable governance. We're working on anti-money laundering type activities. We just took a paper to our board on illicit financial flows and the type of engagement that the bank could do there. I really wanted to come back on some of these efficiency issues and things, and I wanted to say first, we're a public sector institution. We have huge growing demand from our clients. It's an incumbent upon us to be as efficient as we can. We're working on that. I think we are with OPCS and HART, who the sponsor of this event. I think we're trying to look at a lot of aspects about the way we process projects, how we can be more efficient, how we can sort of delegate authorities down, get people to be more risk-taking. It's incumbent upon us that as a public sector institution, in the face of enormous growing demand, that we need to be as efficient as we can in the use of those resources and in the spirit of helping our clients. I would like to point out, I mean, in a sense that, and Mark touched on this a bit and Alan touched on this a bit, I mean, on the last 3 IDA replenishments, basically IDA resources have gone from 40 to 52 billion, from IDA 15 to IDA 17, so that's a 25% increase of IDA resources. I think we worked after the capital increase in 2010, had programmed a bank at 15 billion, IBRD at $15 billion a year. We raised that to 25 billion, and now we are seeing demand that's in excess of that. At the same time, we're taking 400 million out of the institution. So, I mean, when you look at the size of the increase in the amount of the volume of business that we've done over the last 5 years or so, and you look at it at the same time going through an expenditure reduction exercise where, in fact, we have raised prices, we shortened maturities, we also looked at our equity to loan ratio and lowered that to get more leverage out of our capital. So, I mean, with the expansion that we've done in the business as well as the expenditure reduction that we've gone through, I think if you look at it from that point of view, I think as a public sector institution, we can be quite proud of the level of outputs and lending volume that we're delivering on the basis of the budget we have. We have also thousands of knowledge products. But I just want to say that we're on a journey of efficiency. But if you look at the sort of overall efficiency and the way we have changed the way we use our capital, the way we've taken expenditures out of our base budget, and the volume of engagements we have with our clients, we are, in the big picture, moving to be more efficient. But I don't want to deny the fact that we can do projects faster, and we are trying to do projects faster. The President's committed to do them 33% faster from concept note to first disbursement. We're making some progress on that, but not enough. I think we come into work every day and try to think about how we can do that. A lot of it is behavioral and cultural, as Mark said. And just to leave one last point, I mean, we're being asked to engage in more difficult and fragile environments and more complex projects. So that also puts some strain on our resources. So I'm not here to argue that we can't be more efficient, but I'm here to argue that I think of the track record in terms of a delivery over the last few years at the same time of an expenditure reduction exercise is something that I think we've made great strides and we need to make more. So let me leave it at that. Thanks.
Thank you very much, Kyle. I think we have to wrap up because we're getting to the end and I know people have other meetings. So let me just make a couple of comments on what I hear. One is that we do in fact have a period ahead of us where there are a lot of challenges, and these are macroeconomic challenges, they're global public good challenges, and they're challenges of getting resources to where they are needed in typically the most needy countries. And a lot of what I hear is on these two issues of leverage and risk, that we need to do everything we can to leverage the resources that we have, and we also need to deal with risk, whether it's macroeconomic risk or whether it's political risk in the more fragile countries or catastrophic risk. And so a lot of the discussion has been around those themes, really, the themes of leveraging resources. And I think it's been also very interesting to get a perspective on how the bank sees its future. This our question about what does a bigger and better bank mean. So I think our external participants have also thrown up a few challenges for us as we go forward. And to me, certainly has been a very interesting session. So thank you all very much, panel. Hope you've enjoyed this as much as I have. And thank you all for coming.